Well, good day, all. Ira Epstein, and here we are with your metal market wrap-up. And I'm late tonight because I can't figure out what to really say in my written newsletter. It's a hard night for me. There's so much going on, and my thought process is something changed today. And today, by the way, we are on February 9th, 2023, and we're sitting here at 6:45 p.m. Central Time. So coming in, you saw everything was strong in terms of the stock market. The dollar was doing okay. The thought process, I was reading reports, Bloomberg, Reuters, Market Watch, the Wall Street Journal, and the bets were still there that, hey, the market doesn't believe the Fed can stay the course. The swap bets are there. But as I told you also recently, there's been some outlier bets going on, and there's more talk about 6% terminal rate instead of the 5.1. Interesting. Well, by day's end, and I wrote in my newsletter this morning, I said, be careful. I published this at 11:26 a.m. this morning. I was looking at it again. I said, you're starting to lose the embedded readings, and if you do, watch out. The stock market's probably going to go back to the 18-day average of closes in the indices. Well, guess what? You lost the embedded readings. So you're under pressure there. They got hit pretty hard today. There's been a change of psychology. These changes come and go. You know that. They don't have to sit in, but they're important. So the gold market's down $6 tonight. You're back under $22 in silver. You can't seem to get away from the $4 mark for the time being in copper. And I read the report just like everybody. They keep talking about lost production going to be in Chile, lost production going to be in other parts of the world. South Africa today, they declared a national disaster for the mines. They can't get enough electricity. So the country declared a national disaster for it. That gives the government certain powers, but there's no way to replace it. You got to get money. You got to build new infrastructure. They have a serious issue, and that affects everything. When you and I look at the gold market, you wouldn't know it, but the gold is still up for the week. It's up an eighth. Okay, not very much. When we look at the swing lines on the daily bar chart, they turn bearish. You had a big outside day down. Now, if you haven't taken my outside day course, now is the time to do it. You're getting all these patterns. We're already February 9th. We're through with the January effect of the market. Now we're back to normal. If you want to know how to work with that, just move your cursor up here. There'll be an icon. Give it a click or go to our website at iraepstein.com. And from there, go to education. It's laid out for you right there. All right. So in looking at it, unless you get over today's high on Friday or Monday, it could be a continuation pattern. How far down could it go? Well, I mentioned yesterday's videos that maybe we got the 1812 area again as a cycle low. There is a 70-day cycle that works in a lot of these markets, and there's variables on that, obviously, but that could be a number that kicks in the marketplace. And I know you're hearing me say cycles. What do I know? I've taken cycle training from some of the best. The best cycle guy I knew was Walt Bresser. He's long gone, but I was trained under him, and I loved working with him. And he had an interesting way of doing it, and I was impressed. But I gave up on that because I found that the work that I'm doing incorporates it enough where I'm very comfortable. Some people look for the turns. I no longer look for the turns. That's the difference. I don't want to be the guy that's trying to buy the low for the turn up or sell the high for the turn down. I want to be the guy that's wrong up here. And you'll say, why, Ira? Because I was with the trend. And when the trend changes, I'll come out. The guy that's trying to do that misses this whole move. That's what I learned about cycles. It's my opinion, but yes, I taught cycles for years, not just know them, I taught them. I was a protege there, so I liked what Walt had taught. All right, but to make a long story short, you were coming down here, and the Bollinger Bands, you made your run for it today. So you've already hit one of the target areas. You missed it by $1. You're in the target zone. If it falls further tonight, 1861.30 thereabout could be the number. And you're oversold. So Do I think there's a lot of downside? Don't know. If the market's going to embed and both numbers tonight are getting under there, well, then by Tuesday, the close of business, you can be embedded. Then I'm going to open up and tell you, I think we're going to 1812. This is a real important move in gold right now. Got to see what it does. That's why that outside day course is so important. When we look at the gold-silver ratio, silver's still losing to the gold, and look at how the silver just keeps coming unglued. Another outside day down, and this market's trying to make its run at embedding. Now, you can't count Friday's action because we don't know where Friday will finish up, but I can certainly count Thursday's action. Both numbers were under 20. The day before, they're both under 20. They weren't the day before. You see that? So tomorrow they can embed. If they do that, well, this whole area then is open up to the 21-26 area. But the first major support is staring you in the face. Do you have to hit it? Not really, because here too you did go to the Bollinger Band. And the next big support is the 100-day average, the first challenge of it with that number. I think the bears are coming out here, and I think they'll reestablish if you embed. In the copper market, you still have the pressure. We haven't seen China stepping into the market and doing anything in the way of big purchases that I'm seeing. The market keeps trying to hold good rallies, and it's not able to just yet. Still under pressure. The platinum market, complete collapse. And now it's making its run for the 200-day average in the lower band, and it's embedded. So this is still very much that play. I was nervous about when the market 2 days ago was up there. There's a moving average that I don't show here that was the sale, and it was so close to the 100-day average, I just elected not to take the trade. Well, I'll play the percentages. That was the right thing to have done, but to this particular one, could have made some money on it. In the palladium, you're still bearish. You have lower highs, lower lows. You've already corrected. So now in order to negate the downtrend, you've got to get over 674.50, 1674.50. That's $50 away. It can happen, but it's a long way off. And here's the issue that you have. The dollar keeps hitting the upper Bollinger Band. It's not embedded. So what's it trying to do? It had an outside day down. If it takes out today's high, it does it right into the objective of the upper Bollinger Band. It's a difficult chart. While the swing line is down, the bias is up, and you're overbought. Very, very hard. So I'm going to repeat. You get these outside days down. You've got to learn how to work with them. I created a 9-part video course. You see what I do. You do the same thing. You get the charting software. You get access then to my morning and my ETF video and my written updates for 2 weeks with it. Pays for the whole thing, just right there. How do you get it? Just move your cursor up here, give a click. You can go to iraepstein.com, and you can also go to education there. I'm Ira. You have a good day. I'll see you first thing in the morning or my other videos if you watch them all. Take care.